Hey, good morning. This is May Valensky with Driving Markets, driving while talking about markets. Anything said in this piece is media publication only. It's not investment advice, not financial advice, etc., etc. Let's kick off. Okay, so yesterday the markets tumbled. Why did they tumble? Because the ISM report, which is the Institute of Supply Management, PMI, Purchasing Management Index, came out much stronger than expected. And that is a non-manufacturing report, so it's a service sector report. Okay, so they were expecting the number to come out at 53.6, came in at 56, which shows extreme activity, very high activity, good, solid economic growth, and that sent the markets down. And it sent the markets down because that would be a fear factor now that interest rates are going to go up again in the States. Now, I've been saying all along, the American consumer, talk about the US now, the US consumer is resilient, and the service sector is resilient, and the manufacturing sector is resilient. And the fact that inflation has come down in October, November, and let's see what's going to happen in December, is the fact that it's an aberration. It's not changed the direction of inflation. I believe the economists, Wall Street, and the analysts have got it wrong. I think inflation in the States is going to go into double-digit figures in 2023. Now, you might call me negative, and you might call me doom and gloom. I'm only giving you the facts as they are. You could be an ostrich and stick your head in the sand and hope everything's rosy. Now, for example, I'll give you one of the rosy pictures, is that the investor, what about the US in a survey, the typical investor was asked, would they get back into the stock market now? And the answer is yes, they would get back in the stock market now. And which stocks would they buy? They'd buy really solid defensive stocks, not speculative stocks. So they'd buy stocks like Amazon, Apple, Microsoft, Google. They consider to be solid, resilient stocks for a recession, as most consumers believe that we're going into recession. But going back to those ISM numbers, what that indicates that the service sector is the sector whereby consumers are willing to pay for services is on the increase, and that's going to frighten the Fed. It's going to push them into the let's raise interest rates mode even further, and as a result of that, the markets read into that interest rates may go up now even higher than expected, and that sent equity markets tumbling. The Dow was down 482 points, and the Nasdaq was down more than 270 points. Obviously, when there's a fear of interest rates, I've said all along, the shares that suffer the most are the high-tech stocks. The high-tech stocks are hypersensitive to interest rates because they borrow a hell of a lot of money in order to survive. Most of them are not making profits in the Nasdaq and other sectors, and therefore they depend on good, solid cash flow. They don't have the cash flow. They've got to go and borrow the money for liquidity purposes from investors or from the banks. The US 10-year Treasury picked up slightly yesterday, again on the back that maybe interest rates are going up. So what's going to happen now to the end of the year? So the end of the year, I reckon that the US may disregard these numbers and push higher. However, it's probably a great opportunity to sell into the market, because it looks like the markets may be peaking at this particular level. So if you want to go short, you want to sell the market now, it's probably a good opportunity to do that. So take that into consideration. Looking at foreign exchange, obviously I've got to touch on foreign exchange. It's a big one. The dollar picked up yesterday against the majors, which is the dollar, the euro, and the yen. Swiss franc, Aussie dollar climbed a little bit higher. Again, when equity markets go down, the dollar automatically goes up because it's seen as a hedge, it's seen as a safe haven, it's seen as a place of lower risk. So the dollar is bought into, especially when the underlying concern there is a rise in interest rates. So you'd look at the differential between what you're getting in Europe and what you're getting in the UK, and what you're getting in Japan or in Switzerland, and you say, well, I'm going to get a higher interest rate in the US, and therefore you buy US assets, or you buy the US dollar. You have to convert currency into dollars to get a better interest rate in the States. So the dollar was a little bit strong yesterday. Interestingly enough, cryptos, Bitcoin came off because, again, Bitcoin is crypto is a high risk asset, high risk investment. It's got no real fundamental basis to cryptos. We have to understand that. I'm not anti cryptos. a lot of viewers think that I'm completely anti-cryptos. I'm not. It's just very hard to measure Bitcoin. It's very hard to say, okay, what are the fundamentals? Where's the profit? Where's its year on year? What's its production? It's just a binary bet. It's just, is it up or is it down? And that's really what Bitcoin is. Don't be fooled that a lot of people want to get in to Bitcoin and cryptos because they've got this fear of missing out, this FOMO attitude, whereby they're worried that if it does go up, they're going to miss the action. It's very much like a live casino, and I expect Bitcoin, I've said all along, that Bitcoin is going to go around 15,000. I'm sort of betting my reputation on that, so keep an eye on that one as far as cryptos are concerned. Oil came off yesterday slightly. Again, recession fears. If there's a recession, there'd be less demand for oil. What was interesting is that we're going into a very, very severe, dangerous winter in Europe, where they're actually having to cut energy prices now, cut energy and start making power cuts. So the Eiffel Tower was actually locked down last night, or closed down. The lights were turned off, and across Europe, what they're doing is they're reducing the level of heating allowed, for example, in public swimming pools. So the swimming pool temperature has to be dropped to a lower level to save energy. Putin could turn off the gas pipeline. If he was to turn off the gas pipeline, then Europe effectively would freeze. But they are cutting back on the use of energy to save energy over the winter. I think it's going to be really, really tough over the winter months, and that's just an indication of where we're going forward. Regarding Friday, we've got PPI on Friday, Producer Price Index out on Friday in the States. That'll be another big inflation number, another big interest rate indicator as to where the US economy is going regarding inflation and regarding interest rates. I expect that number to be higher than expected, and if it comes in much higher than expected, then what you're going to have equity markets fall and the dollar rise, and obviously cryptos are going to fall as well. That's more or less it for today. This is Mayor Walensky with Driving Markets. Subscribe, share, and pass comments. Have a good day.